Hello and welcome to the December monthly update for Utilico Emerging Markets. I'm Mark Lebbell, Senior Analyst. December's NAV total return increased by 0.7%, although this was below the performance of the MSCI Emerging Markets Total Return Index, which was up by 1.5% in sterling terms. Global markets in December continue to be dominated by speculation about what the incoming Trump administration might mean for US domestic economic policies and international geopolitics, and consequently what the resulting impact on trade flows, interest rates, exchange rates, and commodity prices might be. The Federal Reserve cut interest rates in December by 25 basis points, but hinted that committee members had slowed their expectations for future rate cuts since their November meeting. The US dollar strengthened, the S&P 500 index declined by 2.5% during the month. The European Central Bank also cut rates by 25 basis points in December, whilst rates were left unchanged by the Bank of England following a rise in UK inflation to 2.6% in November. In the emerging markets, China held interest rates in December, but so far tangible signs of the stimulus measures announced in September remain largely elusive. Demand for Chinese Treasury bonds was high, resulting in sharply reduced yields as investors sought a safe haven amid deflation fears. Chinese equity markets were also positive, with the Shanghai Composite Index gaining 0.8% in December and Hong Kong's Hang Seng Index up by 3.3%. Elsewhere in Asia, Vietnam's Ho Chi Minh Index gained 1.3% and the Bursa Malaysia Index was up by 3.0%. However, there was a decline of 2.1% in India's Sensex Index and the PSCI Index in the Philippines fell by 1.3%. Brazil raised interest rates by 100 basis points, which was more than market expectations, to 12.25%. The Central Bank Committee signalling at least two similar rate rises in early 2025 and calling for greater fiscal discipline. This triggered a further sell-off in Brazilian stocks, with the Bovespa index down 4.3%, and there was a further downward pressure on the Brazilian real, which declined by 1.9% against sterling. Elsewhere in LATAM, Mexico's Mexpol index declined by 0.6%, but Chile's ISPA index gained 2.0% in December. Within the UEM portfolio, there was one change to the top 30 holdings in December, with Hermina Hospitals replacing Colombia's ISA. Hermina is a leading healthcare provider in Indonesia, operating 51 general care hospitals in 36 cities, and its shares were up by 9.3% in the month. Other strong performers in December included China's Kunlun Energy, which was up by 14.3% following the release of a positive broker note. Vietnam Opportunity Fund was up 7.2%, and FPT Corporation rose by 5.1% after more positive contract news. Ocean Wilson's was up by 6.1%. Most Brazilian stocks were weaker in December, with Serena Energy declining by 12.4%, Horizon down 9.2%, and Rumo down by 8.3%. This reflected weak general investor sentiment rather than company-specific concerns. Uganda's UEMA fell by 7.1%. UEM share price increased in the month by 6.5%, ending December at 213p. The discount to NAV reduced to 17.4% from 22.0% at the end of November. For more details, please do read UEM's December fact sheet, which is available on the website at uemtrust.co.uk. Thank you for your interest in UEM.